What's going on, everyone? This is Rob from Rob Invest coming at you with another video. Today's topic is retiring off Covered Call ETFs. How much money are you going to need? Now, before we get to the topic, please understand that I am not a financial advisor. This video is for entertainment purposes, so please do your own due diligence. So the topic, again, is retiring on Covered Call ETFs and how much money you need. So to break this down, we're gonna break it down into two steps. Now, each step is going to have a formula to calculate the things that you need for retirement. All right, so let's talk about the first formula. The first formula, or the first step, is finding out how much you need per year on a yearly basis. Some of you may need $50,000, some of you may need $75,000, some of you may need $100,000, some of you may need $1 million a year. It's just going to depend on your personal preference. But let's just stick to $50,000 a year. All right. Now you got your $50,000 a year, so you chose the amount of yearly income that you're going to need. Then the next step is choosing the yield that you're going to retire with. It could be a 10% yield, it could be a 15% yield, 25, 30, 50, 100% yield. But gotta give you guys fair warning. The higher the dividend yield, the less stable it's going to be. So if you're trying to retire off a 50% yield, then that 50% yield is not going to always be 50%. One month it could be 30%, the next month it could be 60%, and the next month it could be 35%. But now with lower yields, it's going to be more stable. So if you get a 10% yield, the yield for the most part is going to be 10%. Now it might fluctuate to 9% to 11%, but that's way more stable than a 50% yield. Now, let's pick 10% yield for an example. So you're going to take $50,000 a year, and then you're going to divide by 10%. But what you're going to do with that 10%, you're going to turn it into a decimal. 10% converts to 0.10 for a decimal. So you divide that up, and that gives you a net worth or total amount of $500,000. Now, the second formula isn't as important as the first formula, but in order to get the second formula, you need the first formula. Now, the second formula is calculating how many shares you're going to need in order to get to that $500,000. All right, so again, this step is pretty simple. You just take your amount that you need, and then you're going to divide it by the share price. So let's go back to the first formula / first step. Let's say you need $500,000 to make your $50,000 a year. Now what you're going to do is take that $50,000, we're going to do some division again, and you're going to divide it by the share price. So let's say the share price is $50 a share. You're going to take $500,000 and you're going to divide it by 50, which is going to give you 1,000. So this formula says you need approximately 1,000 shares to receive that $500,000, which is going to make you $50,000 a year. Now, just to warn you guys, the stock market does not stay extremely flat. Prices fluctuate every day, every single hour, every single second, every single day, and this is for the market hours every market day. So you might buy some shares for $49 a share. You might buy some shares for $51 a share. So it's not going to be the perfect 50-50-50. Now, before we wrap this video up, I just need to let you guys know that doing these two formulas and doing these two steps, I would not use extremely high yield ETFs like Conies, the YMAXs, the Misties, especially the Conies and the Misties, because even in the OTs, because these have extreme dividend yields. Like one day they might be 90%, the other day it might be 150%, and then the other day it might be 100%, and then the next day it might be 50%. So that's just going to make the calculation even harder. And then with these ETFs, you're going to experience a good amount of NAV erosion, which is really going to throw out the equation. All right, guys, if you guys like this video, please like, share, and subscribe. If you guys have any opinions on this formula, please put it in the comment section. If you guys are planning to retire on these dividend funds, what funds are you going to retire on, and what dividend yield are you guys thinking about retiring on? All right, guys, that's all I got for you. See you in the next video.